All right. Hi, everyone. Welcome to day two of Synergy Traders number 58, live on TimingResearch.com. This is 30 favorite indicators. Learn what the pros actually use. And so I have invited some top educators, and they're providing you with actionable info on the indicators they use every day in today's markets. So this event is brought to you by TradeOutLoud.com and TimingResearch.com, along with our co-sponsors, BigTrends.com, LogicalSignals.com, OptionProfessor.com, and MadHedgeFundTrader.com. And of course, this uh, series is for educational purposes only. Trading is not suitable for all people. And please consult a financial advisor and only trade with money you can afford to lose. All of the sessions are being recorded individually, and those will be available on TimingResearch.com. Also, if you search for Timing Research on YouTube, Substack, or your favorite podcast app, you can find the recordings there as well. So to open the day for us, day two, we have Silas Peters of TradesTrending.com. So I'm going to go ahead and turn it over to him.
All right, thanks so much, David and Aka and the Timing Research team. I really appreciate the opportunity to come and present to you guys bright and early here on Wednesday, July 23rd, 2025. And what I'm going to try to do is get going here immediately as to not interrupt the day's presentations. You guys have a lot of good speakers and educators and traders coming up down the pipeline. So my name is Silas Peters from Trades Trading. Looks like let me find my chat so I can see what's going on. Sound is good, audio is good, visuals are good. All right, so really excited to be sharing this unique strategy with you. I do call it my 15-minute trading blueprint. Been using this for nearly 20 years and it's still crushing it. And the thing is, I want you to think about is that if I'm still talking about this 20-year, and it's been 20 years, something obviously must work. Otherwise, I wouldn't be wasting my breath talking to you about something that, of course, does not work. So this still crushes it. Best thing about it is its simplicity. It's a mechanical, stress-free, emotion-free trading method. Can be applied literally on any market or any time frame. So let's get right to it. Now, we must first cover the risk disclaimer. We know trading is risky. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading, i.e., you can lose money. Only risk capital should be used in trading. Now, what I want to do here is ask, what does everybody trade? I want to kind of keep this interactive here. Do you trade stocks? Do you trade options, futures, forex, cryptocurrency? What does everybody trade? So, reason I like to ask this, I like to get a feel for the room here. I trade stocks, I trade options, I trade futures, a little bit of FX, primarily options and futures, like the indices and also commodities. But the reason that I ask is because what I'm going to share with you today works in all of those markets and asset classes. It's highly accurate, works in all time frames. It's 99% mechanical, and it's perfect for small accounts. But most importantly, it's simple. Okay, I've used this strategy with a $2,000 account, $20,000 accounts, even $100,000 plus accounts in every market situation. From the '08 financial crisis, roaring bull markets, traded through debt crises, government shutdowns, presidential elections, flash crashes, you name it, from scalping and intraday trade to swing trading for a few days, in position trading for weeks and or months. You can do this with small or large accounts. It can take as little as 15 minutes a week if you wish. So thanks everybody answering there in the chat. Now, before we dive into all this, let me introduce myself, who I am, and maybe why you should listen to me. Other than that, I'm a simple dude, family man who thoroughly enjoys being a two-girl dad. I've got a strong passion for the markets, golf, cooking, the outdoors, and Alabama football. But this is where it all started, the great city of Chicago. It's here where I cut my teeth in commodity markets right out of college, working at the Chicago Board of Trade. Very quickly, I found myself working the Asian, European, and early New York session trade desk, trading across the CBOT, Merck, NIBOT, and IMEX, various London Asian exchanges, trading for a hedge fund, banks, CTAs, trading and handling enormous size. 300 lot bond orders, 400 lot S&P orders, 100 lot gold option orders, 250 lot Japanese government bond orders. Such an eye-opening experience. to see how the biggest traders, market makers, and funds were trading and making decisions. So I did this for a while, soaking up anything and everything I could, any and everything market related, acquiring multiple futures and securities licenses. I was a sponge. But then my college sweetheart, and now my wife of nearly 20 years, talked me into coming home to settle down and start a family. So we headed back down south, and I immersed myself into the quieter side of finance, helping manage equity and fixed income portfolios in this glass building right here. Then moving on and working for a private $2.5 billion family office. And then during this journey, I managed to stay in the market, specifically the commodity markets, running and owning some brokerage units, and then finally starting my publishing brand in 2016. And it's here where I found my real calling. It's here where I teach students across the globe different ways they can generate the skills necessary to trade, manage portfolios, and turn their trading around in the right direction. And today, I want to help you do that too. But let's quickly go back to the journey. The journey wasn't always easy. There was a learning curve. There were several obstacles on the path to where I am today. The first step was obviously learning. Your school cannot teach real life experience in the markets. In the beginning, I made money. In fact, I made a substantial money. Was I lucky? No. But ignorance and greed cost me my profits, and I ended up blowing an account. In fact, I blew up others in what I like to call revenge trading. Anybody familiar with revenge trading? It was a very humbling experience. I almost gave up, almost quit. I was in a dark place. Nothing seemed to work. I always seemed to be on the wrong side. But guess what got me back in the game? I went back to the very first trading setup I learned almost 20 years ago, and I got back on track. Started banking wins again. I'd gone off the reservation looking for the elusive Holy Grail, but my journey ultimately led me back to where I'd first started. So I went back to my roots, started working my repeatable process to find overall consistency. Now, let me ask you this. Who is or has been a victim of paralysis analysis? Anybody affected by this? And I was at a time raising my hand, and what we're going to do here, who here has, done all the research they thought they could do, and they've got the finger on the mouse ready to pull the trigger. And then what happens? You got this line crosses that line, or Jim Cramer says sell and you're about to buy, and you end up not taking action and you miss out on the opportunity. So a lot of us are or have been there at some point. And what I'm going to try to do is maintain a pretty simple theme today, is that we know trading is not easy, but it can be simple. And I show you what I have in store for you today, it will be self-liberating. So this is my agenda and promise to you, is that we're going to learn a simple mechanical setup that is repeatable regardless of the market or time frame. And so I'm going to come back and ask you at some point later today if I have fulfilled that promise. Now, we know that markets don't go straight up and down forever. They go up and down in waves over different time frames, and literally, billions, if not trillions of dollars have been made by smart traders recognizing those trends. At the same time, that amount of money has been lost by those who think they knew what they were looking at and got it wrong. So what I'm going to do is show you how to get on the right side of the moves before they begin. I'm going to show you how to identify setups like this short in Halliburton, like this short in Halliburton, like this long here in Halliburton. This is, 10% move. This is an 8% move. This is a 12% move. May not sound sexy, when your favorite meme stock it has gained 859%. But these moves can add up. It's $1,100 on 100 shares, $2,000 on 5 option contracts. I'm going to show you how you can identify a short trade like this in Bristol Myers, another short trade, another long trade, another long trade. We have, 3.5% move, 6% move, 9%. It's $400, $800, $900 on 100 shares. Those wins all start to add up. Here we are in Lockheed Martin. Show you how you could have spotted this 5% move here, a 6% long here, 6% plus move here, by buying the stock, buying options, selling spreads, whatever your style is. And then here's a 30-minute chart of gold futures. This is an $800 per contract move. This is a $450 per contract move. Day traders out there, a 5-minute chart of the E-mini S&P, you've got plus 3 points, you got 8 points, you've got 6 points, you've got 10 points. That's over $1,300 a contract in a single session. And so the potential is there because all we're doing is trading the ebbs and flows of the natural market movement every single day. And here for the scalpers, a 6-10 tick chart on the 30-year bonds. You've got 4 ticks, $125, 7 ticks, $218 in a single session, trading only one contract. Who would be happy with $218 a day, or $500 a day, or $1,000 a day? This pattern is responsible for identifying these moves before they happen and also let you know where to get out. And so everything I showed you, you ask, is it really that simple? Well, again, we know trading is not easy, but it can be simple. You see, when I got started, I was probably a lot like you, sifting through hundreds of different strategies, systems, setups, you name it. I tried all kinds of stuff, indicators, red light, green light systems, Greeks, alert services, robots, and most of it was garbage. But the single most important part of this journey was when I learned to keep it simple. Once I got rid of the clutter, the fancy blinking gizmos and indicators, and started focusing on pure price action led me to seeing one simple pattern over and over again. And guess what? This is when it started clicking. It all started clicking. And so if you're sitting here as a new trader or a struggling trader or even an experienced trader, I'm about to teach you my foundational go-to strategy that got me from a struggling trader to a winning trader. And I'm telling you right here, right now, that this is a simple mechanical setup that anyone can learn, and you will keep this in your trading arsenal for years to come. And in the end of today's workshop, I'm going to make you an offer you can't refuse. How you can join my team with a specific set of tools and a plan that helps shortcut not only your learning curve, but also the time you need to spend looking for quality setups. So let's get right to it. The price action pattern we'll be discussing today is, drumroll please, the 1, 2, 3 pattern. Who here is familiar with the 1, 2, 3 pattern? Let me see in the chat here who's familiar. Probably a lot of you. And this is one of the most fundamental technical patterns in the textbook. We're talking your technical analysis 101, but highly, and I mean highly, overlooked by most traders. And the reason why is because of its simplicity. And the setup now is price action based. And guess what? Price action is king. And speaking of king, did you know this? Did you know that McDonald's and Burger King have different ways of choosing where to open new restaurants? McDonald's does tons of research. They look at maps, population counts, traffic patterns, competitive analysis, on until they find the perfect location for a new store. Burger King approaches it differently. They wait to see where McDonald's opens up a new store, and they open one up across the street or down the block. They get the same result with a lot less time and effort. Now, when we relate this to trading, we can let all of the big Wall Street institutional traders do all the research on which stocks or markets to buy and sell, but all we have to do is look at the price action, which takes account all of their fancy processes. Basically, we are the Burger King to Wall Street's McDonald's. Now, the setup is price action based. The pattern is comprised of a low, a higher high, a higher low, and a break of that higher high in the case that we're going long. Same rules apply, inverse if short. Anticipates a change in trend from up to down on a break below the 2 or B point. Anticipates a change from down to up on a break above the do or B point. The strategy usually occurs at the end of trends and swings. Can be an indication of a change in trend. Can also be found with a trading range. I will stress that it works extremely well when the pattern sets up at important areas of support resistance. Other technical patterns like head, shoulders, tops, bottoms, double tops, bottoms, and more. So let's take a look at the mechanics. So when we start off with 1, 2, 3 bottoms, we use 1, 2, 3 bottoms When we are bullish or looking to go long, meaning we're either to buy the stock, buy call options, or any other market because we're expecting it to go higher. And so as the market trades lower and finds support, we get our number one. As the market retraces higher and pulls back, we get our number two. As the market retraces and stops printing these higher lows, we get our number three. And 1, 2, 3 bottom traders are looking to get long on breaks or closes above the number two. We use 1, 2, 3 tops the same way, but we just flip it upside down. This is when we are bearish or looking to go short, meaning where they're looking to short that stock or that commodity or currency, looking to buy put options, expecting lower prices. So as the market pushes up to resistance and pulls back, we get our number one. As the market retraces lower and pulls up, we get our number two. And as the market stops printing these lower highs and retraces back, we get our number three. So 1, 2, 3 top traders are looking to get short on breaks or closes below the number two. Now, one of the great things about these setups is that we don't really have to worry about the first two legs. It's not like we've got to be really glued to our screen, unless maybe we're scalping on a tick chart. But all we have to do to kind of cash in on these setups is spot when it's about to go past the number 2 point. It's that simple. So let's not waste any time because seeing is believing. Now, this is a daily chart of the Australian dollar futures. Now, if you don't trade futures, you could look at FXA, the ETF that tracks the Aussie. Forex traders could use Aussie USD in the Forex market. Now, I'll let you guys and gals read all this on the right. And essentially what we're looking for is trying to identify a number 1 point. And that starts with a 52-week high. Now, it's not imperative that we use a 52-week high or 52-week low. We're just using that for example purposes. There are other ways that we'll discuss later where we can kind of dial that in to find more opportunities. So here we have a starting baseline. The market retraces lower, pulls up. We get our number two. And as the market stops printing lower highs, it pulls back. We get our number three. Now, the market could have retraced all the way up here as long as we didn't take out that number one. But here we have a confirmed pattern. So now we know we know pretty much the entire setup, right? We know that we're looking to get short on breaks or closes below the number three. You say, that's good, that's great. But what about the other important ingredients of the recipe? Like, hey, where's my stop? Where's my risk? Where's my target? All very great and very important questions. So we have our initial risk must always be above the high of the number one. Our initial target is the distance between the high of the one measured to the low of the two measured down. So you can see that off the bat, it's a 1-to-1 risk versus reward. That's okay, but we can do better, okay? It's very important, though, to let the market materialize in its anticipated direction. So as we start breaking down here, taking out these old swing lows, we can then move our stop to the next logical area, which would be where? Above the number three high. So by doing that, we've now cut our risk by approximately 60 or 70%, and the trade moves on to meet our target. This is a daily chart of Walmart. Okay, so we have a new 52-week high that gives us a starting point. We have a 1, 2, 3 pattern. We know what 98% of other traders out there are asking themselves. Where am I going to get in? Where's my stop? Where am I taking profits? We know all of that in advance. We know that we're looking to get short on breaks or closes below the number two. We know our initial risk is above the number one high. And we know our initial target is the distance between the high of the one to the low of the two, which is about $5 in this example. Now let's look at 1, 2, 3 bottom examples. As you would guess, it's the same setup, but inverse. Okay, 1, 2, 3 bottom. Now, same logic here. This is a 15-minute chart of the E-mini S&P. You say, well, hold on. Does it make sense to look for a 52-week high or low on an intraday chart? Well, the answer is no. So if we're looking at an intraday chart, whether it's a 1 minute, 2 minute, 5 minute, 10 minute, 15 minute tick chart, whatever, we're looking for what we call session highs or session lows. And simply put, wherever you start your trading day, if that's in maybe the 3 a.m. European session, maybe it's the 9:30 New York Cash Open, maybe it's lunchtime, maybe it's the last hour of the day. Wherever you start your day, you're looking for new highs or new lows. Okay, so this is a new session low, gives us a new number one starting point. 1, 2, 3. Now let's talk about a couple of different entry techniques. Okay, a couple different entry techniques. So aggressive traders can work a buy stop, a tick or two above the number two high. You get triggered immediately into the trade. An alternative method, and one that I like, is wait for the market to come back and retest, and or come back and do what we call a second pass or hook on the trade. Okay, so sometimes the trade will bust up and out, hit your target, and leave you at the train station. That's okay. That's okay because there are plenty of other opportunities. There's no need to get our feelings hurt. But sometimes, of course, the market will come up, trigger you in, and then come roll back lower, and then go back below the number one and stop you out. So sometimes this retest, or what we call the second pass or hook, gives you additional confirmation. It says, hey, we are indeed ready to move back to the upside in our direction. Okay. This is a weekly chart of Apple, a hell of a way to catch some longer term position type moves. Here we have a multi-week low. We also have a double bottom. You can see the market breaks out above the number two here in this large bullish candle. And then we trade sideways for a few weeks. We come back down, retest, hook back up. That's our confirmation. Okay, that's our confirmation. What do we do? How do we do it? Well, we can buy Apple stock. We can buy call options. We can sell bull put spreads. Whatever your flavor or style is. Okay, there's plenty of different ways. Now, hate to bust your bubble, but guess what? They don't all work. Now we know we're all big boys and girls here. We know that there's no holy grail in trading or in life. And I probably took this one in my live account. So here we have a market's gone straight up, new session high. We have a 1, 2, 3. Aggressive traders are getting short on the initial break. Conservative traders are waiting for the push up in the second pass. Short here, you're up a few points. Now, if you exercise any type of money management, as the market started breaking down here, your stop would have gone above the high of the 3, and you get stopped out here for a loss. If you sat on your hands and didn't do anything, well, the market rises back up, stops you out above the high of the number 1. But guess what? This high is greater than that high, so we start to count a new count. 1, 2, 3, and we're able to get short on breaks or closes below the number 2, and we end up having a profitable trade. Now, this is what I call a no trigger or voided trade. It's neither good, bad, nor ugly. It is what it is. And I'm going to tell you here in a minute why I love this situation. So here we have a 1, 2, 3 pattern. We're looking to get long here by the number 2, but the market says, no, I'm going to go lower, goes trades below the number 1. So we start to count over. We have 1, 2, 3. We're looking to get long here. Market says, no, I'm going to roll back over, take out the number 1 low. We start to count over. 1, 2, 3. We're finally able to get long on the third attempt. Now, does anybody know what is happening in this situation? So if we have price making lower lows, lower lows, lower lows, but if we added an oscillator, such as an RSI, MACD, stochastics, and it's doing this, higher lows, higher lows, higher lows, but price is making lower lows, lower lows, lower lows, what is that called, guys? What is that called? Yes, that is called bullish divergence. So when we have bullish divergence setting up or occurring with these high probability patterns, it adds a little extra icing to the cupcake. All right, so trade management again, confirmation of interest on a break above the 2 or B point for a long, or close below the 2 or B point for a short. Exit strategies, I would say go for the distance between the 1 and 2 as your initial target. So if you're trading one lot, one share, one contract, whatever, go for this target first until you can have the ability to scale with multiple contracts, because this is what happens a lot of times. We have that 1, 2, 3 pattern, looks like this, and we know that we're looking to get long, and we know our target is up here. It's uncanny how more often than not it will tag that target often to the tick, and then reverse. So I say, hey, take, if you're trading multiples, I say, hey, take a third, half, 2/3 off at this level here, jack your stops up to break even, and then put yourself into kind of a free position, free ride, and let the trade go out. Now, as far as other trailing mechanisms and trailing methods, they come a dime a dozen. You've really got to figure out what works best for you. Parsar, moving averages, support resistance levels. You've got to figure out what works best for you. I like to use good old fashioned price action, swing high, swing low, supply demand levels. All right. So I showed you the setup works on any market, which is pips and Forex, Pepsi stock, potash or pot stocks, pork bellies, and a Polish zloty. I've also showed you that it works on any time frame, whether you trade on a tick chart, a 1 minute, 5 minute, 15 minute, hourly, daily, weekly, or higher, and also on any trading style. So, what is everybody's trade style? I'm going to take a swig of coffee here. Let me know, are you a position trader, swing trader, day trader, scalper, tick trader? What is everybody's trade style? All right, I appreciate that. And the reason I ask is because that is a common question that I get. It's like, well, does it work on this time frame? Does it work on that time frame? And the answer is it works at every time frame. And the reason I also ask is because you have to figure out or determine what your bread and butter is. I'm not here to tell you that this only applies on a 5 minute chart of NASDAQ or a weekly chart of ExxonMobil, because it's not true. We're trading price action at the end of the day. That's all we're doing is trading price action. So some of us have different situations, different schedules. Some of us can't day trade. Some of us don't want day trade. Some of us can't swing trade, whatever it is. And so these are some of my bread and butter time frames that I like. I also like the 1 and 2 minute chart intraday. 5 and 10 are great. And then the hourly, 4 hour, and the daily, these are all really sweet spots. And then those that like a little bit more action, 6-10 tick chart is also good on trading the indices and other liquid markets. Okay. So you've seen the proof. Let's look at some real trade examples. Not to say that what we just looked at were fake examples. They were real by all means. Let's look at some trade examples we've utilized in some of our services. So I'll let you guys and gals read all this over here on the right. I'm going to look at the chart and work myself from left to right. Okay. So here's a daily chart of crude oil. You could look at USO or some other energy stock. You're going to see the same pattern. And we have 3 setups. So over here on the left was a 52-week high. So he has a starting point, a 1, 2, 3. Now, again, we already know everything we need to know in advance. We know we're looking to get short on breaks or closes below the number 2. We know initial risk is going above the high of the 1, and our initial target is the distance between the high of the 1 measured to the low of the 2 measured down. So we break down here. We meet our $3 or $3,000 per contract price objective, and then we go sideways. People always ask, Silas, does this work in range-bound markets, consolidated markets? Well, the answer is yes. I mean, here's a 1, 2, 3 pattern right here. Trade goes higher, ends up being a nice trade. I'm really looking for new highs or new lows for my next setup, though. And we get just that. This high is higher than that high. So we have a 1, 2, 3 pattern here. We have a nice little trend line break. And what is also going on while I'm licking my chops here is because we are at a time of the year from a seasonal perspective where crude oil and energy markets in general typically gravitate to the downside. So we had this pattern. It's high probability pattern set it up. Here we have, if you missed this initial break, you've got 3, 4, 5 days there of retest. And we come down and meet our $4 or $4,000 per contract price objective. And all we're doing now is we move our stop to break even and we trail the market until we either get stopped out or until we get a reversal. And this market drops down another $20,000 a contract while we're trailing. We get a potential 1, 2, 3 here and a potential 1, 2, 3 here, but the market never takes out the number 2, so we stay in the trade. The market drops down another $10,000 per contract, and we finally get a reversal down here below, a new 1, 2, 3 bottom ends up hitting our $5 or $5,000 per contract price objective. Okay. And here are, again, just some recent here's a $5,900 move, a $9,700 move, a $4,500 move. You see the potential. This is a daily chart of gold. This is actually GLD, the ETF that tracks gold futures. Here we are, a 1, 2, 3 top. We break down below. We come down and reach our $4 per contract price objective. And then we turn around and now we're looking for longs. We're looking for a reversal. 1, 2, 3. We break above the number 2. We reach our $2 per contract price objective. Then we go sideways. Say, well, did you miss this move here? Did you miss that move there? It depends on if you're trading. I mean, here's a 1, 2, 3 right there that goes higher. Here's a 1, 2, 3 here that goes lower. Great trades. Pat yourself on the back. But again, I'm looking for new highs or new lows. And you can see that the market is making new lows because they are lower than this one. So here's a potential 1 count. Here's a 2. But this guy right here is lower than that guy right there. So we have 1, 2, 3. We break above, gap 2 days higher. We come back, retrace, hook back up. That's our confirmation to get long gold, rather. How do we get long gold? Buy gold futures, minis, micros, GLD, call options, sell bull puts, whatever your flavor or style may be. Okay, guys? Let's look at some other recent examples. There's a $19,000 move, $8,000 move, a $24,000 move in climbing. All we're doing is trading the ebbs and flows, guys. Here we are on a Delta Airlines chart. We have 4 examples here. There's a 1, 2, 3 bottom. We gap higher. We come back, retrade or retest, hit our $4 move. We have a new high, so that starts a 1, 2, 3 count right here. We gap below that number 2. I don't personally trade chase. I personally don't chase the gaps, but we've got students that will aggressively be buying put options. We do get another chance. This high is higher than that high. 1, 2, 3. We sell off aggressively below that number 2 again, get a small retracement, $8 move to the downside, and now we flip with a bias to the long side. 1, 2, 3. Break above. We come back, hook back up. We're able to get long here by buying stock, buying call options, selling bull puts, whatever your flavor or style is. Here we are, Delta Airlines, $8.50 move. $13 move, $5.50 move, $8 move, just by trading the ebbs and flow of pure price action. Here's a 4-hour chart of Canadian Swiss franc, CAD Swissy. Here we have a multi-session low, double bottom. We break out aggressively above the number 2. We come back, retest, hook back up. There's where we get long, reach our 70 pip profit objective, and now we are doing what? We're not doing anything but waiting for a reversal signal, okay? Here's a 1, 2. Nope. Here's a 1, 2. Nope. Here's a 1, 2. Nope. Here's a final 1, 2, 3. We break below. We come up. We hook back down. We reach our 40 pip profit objective. Okay. And then here is another recent example, Canadian Swiss, 80 pip move to the upside, 70 pip move, 35 pips and more, 70 pip move, 55 pip move, and more. All the day traders out there, 5-minute chart of NASDAQ, new session low, 1, 2, 3. We break above, we come down, we hook back up. We reach our 13-point profit objective. This happens to be a new session high, so that gives us a new number 1 point. 1, 2, 3. We break down below. We go sideways for a little bit. We have to pop some tums, and then we finally drop and meet our 20-point profit objective. And then we have a new session low right here. 1, 2, 3. We break above the number 2. If you're lucky enough to get long on that retest there, you reach your 30-point profit objective in about 2 bars, okay? And here we are again, 137 tick move, 60 tick move, 91 tick move. Guys, think about this. In the NASDAQ, each point is $20. You do the math, there's so much opportunity on an intraday basis, and there's already been opportunities this morning. So why are you here? Only you and you only can answer that. You're here to learn a mechanical done-for-you strategies for all markets and all time frames. So this is a part where I'm going to ask you, have I fulfilled my promise? Let me see in the chat, have I delivered on my promise? I'm not sure If it gets any more mechanical, simple, easy, there's no guessing when to get in, no guessing where the market is likely headed, no guessing where to get out. If we had 100 traders looking at the same chart, we should have at least 99 seeing the same thing, right? There's always going to be one person that tries to create rocket surgery out of this, and that is not necessary. We do not need to overcomplicate this thing. All we're doing is trading price action. Okay. Now, blood weight. One wait. The one weakness or drawback of these setups is that there are so many of them. Now, how do you catch all of them without spending hours in front of your computer? Well, what if I told you the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and targets were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? I don't know about you, but I would say that would be pretty freaking amazing. Well, if you remember the case studies that we went over like this in crude oil, here's what that looks like where we're letting technology do the work for us. So you guys are smart people. So we have green is your number one, red is your number two, and blue is your number three. 1, 2, 3. If and only if we get a break below the number two, or above the number two, you're going to see this little white chevron plot onto your chart, which will then plot these four beautiful lines, which is entry or breakout level, your risk level, target one, and target two. Remember, target one is the distance between the high, the one, measure two, the low, the two, measure down, and that's TP1. And TP2 is simply 2 times the distance of TP1. And you might be saying and looking, hey, what are all these green arrows? Why are we seeing all these green arrows? Because these are new number ones. It's telling us we're starting new number one counts. So here was that potential 1, 2, 3 here. We never broke above the number two. Here's a 1, 2, 3 here, never broke above the number two. And then we finally get that last pattern down here below. Here's that gold example. Here's the long breakout right here, target one, target two. Here, again, is your next setup, breakout above the number two, target one, target two, and we're looking for a new 1, 2, 3 top pattern in the top right. Here's a Delta Airlines. There's the long, there's the short, there's the short, there's the long. Here is the 5-minute chart of NASDAQ. 5-minute chart of NASDAQ. So we have the short here, and target two happens to be a new session low, hits target two to the tick, which happens to be a session low. Then we have a new pattern. Here's the breakout. We come down, we hook back up, we hit target one. We don't quite hit target two, but it's close enough for government work. You shouldn't have lost any money there. And then we get a new session low. This low is lower than this low. So we have a 1, 2, 3 count. Market just nips its little head there above the number two, breaks down, comes back, pulls back again. We hit target one. And notice that while we're waiting for target two, we're starting to get new potential number one sells. So this is cluing us in that says, hey, we may need to get ready to go short or reverse the position. Well, we end up hitting target two, and then we get a new session high, and we get a new 1, 2, 3 top. So we break down, we come up, and then we come back down again, target one, target two, and we're actually getting a new bottom formation there in the last part of the day. So is this training for you? Is this training for you? If you are new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise we talked about, indicator overload, paralysis analysis, if you just want to simplify your process and add a new strategy to your toolbox, maybe you're already a profitable trader. And if you are, that's great. But who doesn't want to add other strategies that actually work? And if you want a specific step-by-step plan to avoid learning this on your own, then this training could be for you. This is something that anybody can do, even part-time. Doesn't matter if you swing, day, scalp, and you're going to be able to locate these setups in a very mechanical fashion, okay? You're going to know exactly what the setup looks like this in Holly Frontier, followed by a short, followed by a long, just like this in Google. Here's a short, here's a short, here's a long. I mean, could you identify this and sell the stock, sell bear call spreads, or buy puts? Again, sell bear call spreads, buy puts, or sell the stock. All you're doing is trading the ebbs and flows. 4-hour chart of the Canadian dollar. There's a long, there's a short, target one, target two. Here, again, a 233 tick chart for those that love some action. 230 tick chart, target one, target two. There's a target one, target two, target one, target two, and you're just scalping away to your little heart's content. Okay. Now, why do all the work when you let technology do the work for you? So here's where I'm scanning for tops across the Russell 1000, only stocks that are optionable, $20 a share or greater. I hit the green scan button, and what would probably take me days, weeks, or months happens in seconds. I get my results. And so you can scan across multiple assets, instruments, future stocks, ETFs, commodities, currencies across different time frames, all at the same time. Now, we've been looking at Thinkorswim charts. This is what it looks like in TradeStation, or indicator component, your scanner component. Here's what it looks like in NinjaTrader 8. Here's your indicator component and your scanner component. Here's what it looks like in TradingView. It's a 4-hour chart of Apple. This is an indicator component only there with your labels. MetaTrader 4, there's a 4-hour chart of Euro Kiwi. There's your long, there's your short, there's your short, there's your long. We've had it built for wealth charts. Here in wealth charts there, long setup, and also in meta stock. So look how clean and beautiful this is. There's your setup. And when you hit your target, what I like is you get a nice little friendly smiley face. It always makes me feel good when I see that. So we know, guys, that there's no real crystal ball in the markets. But I like to view this as something that provides me with a daily process and plan. Let technology, scan the markets for me, locating that setup. I'm going to go to my platform for entry, and I'm going to manage that trade through the exit. And you can start doing so today and profiting from these predictable patterns, starting with what we call the 3S code. So here is the offer you simply cannot refuse. I want you to think about this. All this programming, coding, software, development costs well into the 5 figures. I mean, 7 platforms, 7 different coding requirements, hundreds of hours of testing. But I realized the original, $3,000 price tag was way out of reach for most folks. Hell, even $2,000, hell, even $1,000. We're not charging anywhere near that. And I mean this when I say I want you to start on the right foot right now with a proven mechanical, no BS, no guessing, straightforward setup that you can literally take and use for the rest of your trading career. So we made this absolutely and completely affordable today for those that are willing to take action and get in right now with today's special offer. We've opened up 25 slots where you're going to get access to the 3S code indicator, the 3S code scanner, the 3S code optimizer, access to our weekly strategy and scan sessions, our private Telegram room, and all of our quick start guide and bonuses for a one-time lifetime fee of $397. And the offer link is tradestrending.net/code, or you can call 502-383-1182. We're opening up 25 slots because we actually like to take care of our students, our members, our clients, and we want to make sure that you get set up for a success as soon as possible, okay? You're going to get access to all this lifetime, one-time payment, and these are the platforms again. So you don't only get access to just one, you get access to any or all of these that you may use. So if you want to load it on Thinkorswim and TradeStation, you want to load it on NinjaTrader and Wealth Charts, whatever platform or platforms you use, you have the ability to load it on all one or multiple at the same time. Now, we've done a deal with PayPal. Those that like to finance through PayPal or just like the convenience, you go to tradestrending.net/code, click on the blue button there, and that will allow you to purchase there through PayPal. Again, you're going to get access to all of the weekly strategy and scan sessions for life. These are my top setups. We do this is in a live trading environment. We go through, we do a high level analysis in the markets. And by the way, they're every Thursday at 11 a.m. Eastern, which is tomorrow. So everybody that joins will get access and an invite. Day and swing trading using the 3S code, using options, minis, micros, setups across stocks, futures, currencies, options, and so much more. All recorded and archived for your convenience. It's your opportunity to ask me questions in a live market environment while we look for trades. And so you're also going to get the indicator scan. I just want to cover this so there's no questions. You're going to get a visual plot of the 1, 2, 3 top and bottom reversal areas that include entry, exit, stop, and target levels. They're all customizable. So if you want to change the colors or the settings, you can scan for setups only, trigger only, or both. You can scan for tops, bottoms, or both. You can scan for intraday setups, swing setups, or position setups, or both, and scan across multiple instruments all at the same time. Okay. Now we're also going to include the 3S optimizer. This is where you can now take the mechanical 1, 2, 3 top and bottom strategy and create and run multiple back tests across various inputs and settings to find the best optimization parameters that fit your trading style. We know that back testing can lead to more profits. The optimizer is another tool that help you can progress in your trading. So here's where I'm running the optimizer across crude oil here, where I get all of my stats and results. Here I'm running across the British pound. Here are my settings and all of my results. Here I'm running this in TradeStation. Here's all of my settings and results. Here's where I'm running it in NinjaTrader with all of my settings and all of my results. So you can add all kinds of various inputs and parameters that fit your trading style. Now, with this package, we are also going to include additional bonuses. My chart pattern principle trading manual and guide. This will help jumpstart you by teaching you how the market works, why markets move the way they do, who the players are, and how to look at it and understand the market the proper way. Bonus setups, how we use the power of seasonality to trade the pattern, and so much more. You're also getting my 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guide because I believe options are a powerful trading instrument if you know how to use them properly. So it's important to me to include this so everyone can take advantage of options if they wish to do so and use it the right way using the 3S code strategy. You also get access to our private Telegram room, our private Telegram channel. Every single day, I'm posting ideas across different markets that meet our criteria. Could be stocks, could be ETFs, could be futures, commodities, currencies, intraday, daily, weekly setups, and so much more. You're going to get lifetime access to that channel where you're getting fish while you are learning how to fish. Here are some posts that were made. Here was a short in Nucor. Here was a short there in Cardinal Health, or CAH. Here was some setups in the E-mini S&P. We had a long setup. Here were a couple of ideas there in Moderna. Short setup followed by a long setup. So you're learning exactly what to do and how to execute. If you haven't noticed too, by the way, you're going to get these price labels here that will give you the exact levels here: entry, stop, target 1, target 2. And, all of this has been an absolute game changer because I used to do all of this by hand. I used to do all this by hand for years. And if you think about it, like, markets are moving fast, and we don't have time to sit here and go, well, okay, that's $122.58. Let me take that, measure that down there. That's going to be $6.31. Let me add $6.31 to $122.58. That's going to be, $130.18. Nobody has time for that, especially if you're trading intraday. So that is the beauty of this technology. Guys, we've got so many success stories of people taking action. This is what makes it all worth it, right? You can sit there and continue to watch YouTube videos and buy this and that. And look, if you're learning and trying to figure out what works for you, then that's great. That's great. But the people that are seeing results, it's because they took action. Okay, these people have taken action using the methodology, following the process, following the rinse and repeat mechanical rules, and they're having success. So, who here is ready to get started? You can go to tradestrending.net/code. You can call 502-383-1182. If you're old school and just want to talk to a real live human being, that is an option. Or you can email support@tradestrending.com as well. We are here to help. We are here to get you on a fast track to success only if you take action. So you go to tradestrending.net/code. And what I will do now is I've got a couple minutes here to answer some questions, and we'll look at the markets before I turn it back over to David. Okay, so let's let me look at your questions here. So the first question I see was, let me pull this up here. There we go. Do I use the same moving averages in all time frames? Yes. What averages are those? Averages I use here are the 5 and 21s, EMA, 5 and 21. So this is a 5 EMA, a 21 EMA, and I do like to use that for confluence when I enter the trade, okay? Leon, can I use it with TradingView and Ninja at the same time? 100%. Leon says, can we use the indicator for futures trading? Leon, you must have came in late. I'm just picking on you, but you must have came in late because we looked at several futures examples. So this is an NASDAQ, guys, in real time. This is does it repaint? No. So here's a 3S code sell. Here's a 3S code sell. Here's a 3S code sell. If we look at intraday chart, here's the 3S code buy. And we just fired off a buy on the 2-minute as well as the 1-minute. It is one of my primary entry confirmation tools. Yes. So the way that we properly use this, the way that we properly use this tool is when we are at key levels, as you can see here in the red and green. This is another proprietary indicator that I've created. So I'm taking buy signals when we are in and around the green zones, and taking sells when we are at the red or sell zones. So here's I was doing some analysis this morning here for our group, looking at a couple of trade examples here. You can see we had a 1, 2, 3 pattern there in Oscar. We gapped down right there at the number 2. There's target 1, and we would be looking for a new number 1 once we make new lows right there. And so yeah, so the way I'm trading this is taking them at the higher time frame buy and sell zones, and looking to either sell stock, sell bear calls, or buy stock or sell bull puts. That is correct. ES, yeah, so we go to the S&P 500. If we look at the S&P 500, just coming off this larger 3S code after the Liberation Day lows, there was your trigger. Here was target 1. And because we're essentially at all-time highs, you can see that we're trying to get new number 1 points. Yep. 30-year bonds, let's see. Let's go to the continuous contract. We go to the continuous contract. So, yeah, I've been playing bonds here. I'd like to trade the 30-year bond options, the options on futures. So here was, you can see the last few setups. There was a sell, there's a buy, and there's a new buy. You can see target 1, target 2, hit target 1, and then back to break even. So once we hit target 1, stops go to break even. I'm not sure what tick blazed is, but no. The platforms again are, let's see if I can remember so many of them. Thinkorswim, TradeStation, NinjaTrader 8, TradingView, MT4, Wealth Charts, and Metastock. And I hope we don't have to do any more. By the way, if we do get this coded for any other platform in the future, that will be grandfathered in for you. That will be grandfathered in for you, no charge. And if and when TradingView allows for scanning functionality, that will be included too. And I hope that they do have some scanning components available right now. But in my opinion, and for lack of a better word, it sucks. So I love TradingView. It is my primary charting platform, but the scanning function is not favorable at this time. Let's see. Somebody asked for Tesla, and then I'll give it back over to David and the timing research team. So let's do this. Tesla, TSLA. All right, let me delete all my ugly drawings. Yeah, does not repaint, guys. Does not repaint. So here's the last signal that we had, the 3S code right there. Target 1, target 2. We had a small 3S code sell there. We had a 3S code sell there that hit target 1. There was a 3S code buy there that hit target 1. So yeah, you can buy simple directionals. You can buy just simple call options, put options. You can sell spreads. Again, it's very flexible depending on what your style is. Okay. All right, guys. I really appreciate it. This has been fun. I love this presentation. It's my bread and butter setup, and hopefully it will now become one of yours in your trading arsenal. I very much appreciate your time and attention. Thanks to David, Anka, and the Timing Research team. Thanks for having me on. You guys enjoy your week and your summer. Stay safe out there, and we'll see you on the flip side.